your views on the downtrend we're seeing. Somebody is saying that it's tied to the new policy in the banking sector. Would you agree with that view?
Well, indeed, that view is quite accurate. Recently, last week precisely, the central bank came out with a new guideline on commercial banking, where you now have regional banks with a capital base requirement of 10 billion, national banks with a requirement of 25, and the international banks with a capital base of 50 billion. Now, what this has done to the market, especially the banking sector, is that it has created a lot of uncertainty regarding that sector, because it's neither here nor there where banks would end up, whether at the regional level or at the national level for most banks. The top tier banks, well, maybe would continue with their international banking strategy. However, there's still a lot of uncertainties in that sector, and given that sector's importance to the boss, it's quite understandable why
it's weighing down the boss right now. Okay, but let's look at the pros and cons of this policy. Like you said, the CBN is doing away with the universal banking policy introduced in 2000, and is now more or less allowing banks to be regional, like you mentioned, or be international, be national, and to also be specialized. What will you say are the pros and cons of this policy for the market right now?
On the upside, one good thing is that we are actually seeing the central bank coming out to say you need to separate commercial banking risks from your investment banking risks. We understand we are expecting merchant banking guidelines from the central bank in the weeks ahead. That's a good thing, and also that will result in seeing us develop a vibrant investment banking model in the country, because what we had hitherto is where commercial banks had investment banking subsidiaries, and to an extent some of these subsidiaries were stifled because certain activities that were within the commercial bank that should have been devolved to the investment banking subsidiaries were held at the commercial level. Now, on the downside, what I see is that if you look at the guideline, I think banks were already operating at these levels anyway. You had your top tier banks already on the continental level and the international level, some of them in the sub-region, and of course in the national space. And also you had your national banks who, as it were, operating all over the country, and you had certain banks concentrating in certain regions of the country, depending on their capital base. Of course, you had the top tier guys doing about 150 billion upwards, and you still had some banks between 50 and 25 billion. So in itself, the banking market space had actually segmented itself. So we actually don't really see the crux of this guideline, as it were, because in our opinion, the market was already operating at these levels anyway.
But can it do any harm for the markets? That's what I'd like to know.
Well, besides the uncertainties created in the equity market, I don't really see doing any harm. Besides the point that for the central bank as a regulator, I would raise questions about its abilities going forward to regulate the banking space, because what I see going forward is probable proliferation of banks, probably taking us to where we were pre-2004, because what this suggests is that by the time the merchant banking guidelines do come out, we would have to see probably a few issuing houses, because, by the way, commercial banks in the new guidelines are not allowed to undertake underwriting activities or keep proprietary positions or invest in equity or hybrid instruments. These, I expect, would now be exclusive reserve of the merchant banks and issuing houses going forward. So I would expect that you would actually find a handful of issuing houses applying for a merchant banking license. It's not impossible that a few discount houses might also opt for the merchant banking license.
Some of them are already at 15 billion.
Yes, so all in all, we might actually end up with more banks. And the question now would be, post the current leadership at the central bank, what kind of regulatory capacity would we have to actually regulate the commercial banks, the merchant banks, the discount houses, the primary mortgage institutions, the loads of microfinance banks we have in the country. So the key concern here for me is actually CBN's capacity to actually ensure that regulations are tight, as they should be going forward.
Okay, now I understand the uncertainty weighing down the equity market, but looking at the individual banks now, do you think there are any out there that might benefit from this new policy?
Well, what I would expect is for those who have actually been champions in their niche markets to continue in that along those lines. I understand certain top tier banks are already looking to divest from their subsidiaries with investment banking activities, while some, for example, First Bank, have actually indicated to us that they are going to migrate to the holdco structure suggested by the central bank. So I expect operators in the banking sector to play to their strengths. For example, First Bank has a very strong investment banking franchise, so hence their preference for the holdco structure, where you would have the commercial bank and the merchant bank and investment banking activities. However, whether you're a top tier bank or a mid tier bank or a lower tier bank, I expect operators to actually play to their strengths.